Good morning. It looks like we had a great session the last one. We hope to continue that. We had our session already start in the Nero's Cafe. I have three gentlemen with me that are experts in the financial services industry. They provide at least money to early stage ventures, though they're going to debate that most of the work they do is in the SME arena. I have Faysal, the young man with a fashion statement on my right with a hat. I have Suvo and Satya. They're each going to give a little bit of an explanation on themselves when they answer their first question. So I'm going to toss out the first question to you, gentlemen. As you are guns in the money business, what do early stage ventures and businesses need more than money?
Good morning, everyone. So I'm Faysal Sohail. I'm a venture capitalist from Silicon Valley. So I've been here all of about 10 hours, and I'm told I'm already the expert in financing SMEs. So take it with a big grain of salt. Obviously, in venture capital business, there's a lot more than money. The key thing we provide to our entrepreneurs is mentorship. We provide recruiting help to our entrepreneurs. We require a lot of business plan, customer introductions, channel introductions. So other than money, we do provide a lot of other help, especially to the early stage companies as a venture capitalist. But I'll hand it over to my banker friends to see what they provide.
Right. My name is Suvo Sarkar. I look after the retail banking and SME business for Emirates NBD, the largest bank in the region. To answer your question, Scott, early stage entrepreneurs, we have a program in the bank, and I believe some other banks do too, to support UAE nationals starting off a business in this country. And we have interest-free loans for the first 3 years. And we support anybody with a business idea and a business plan that we believe is robust and sustainable. And we support that as part of our CSR, as well as our partnership with the government of UAE in supporting SME. So that's our small bit. But otherwise, we deal with SME businesses once they have got some steam in them. And that's normal commercial lending for SMEs.
We'll come back to that part in just a minute.
Thanks, Scott. My name is Satyajeet Roy, and I work with Citi. I look after commercial banking, and in our parlance, commercial banking is both SME and the middle market. Specifically on Scott's question on how we can support an SME before actually becomes an SME is basically around giving a lot of advice to the company or to the promoters or how to set up the business. We do have a value prop around that, and we'll discuss more during the session, but I think it's very important for the SMEs to understand that it is not all about lending. It's not all about borrowing, but how you actually run your business, plan your business. Financials are important, but there are various other things that can come out which the bankers would need at a later stage. So while we discuss that, I think this is a very important point, and we'll probably talk more about it during the discussions going forward.
Thank you, Suvo. As a group, what we're going to do is we're going to go through 4 or 5 questions. Each of these gentlemen will chip in if it's an area of their interest, but then I'm going to try to open it up to the floor for questions for them, because these experts are world-class in terms of resourcing money. They help over 70,000 businesses in the region, so there's a lot of current experience here. But the one question that I will not support when they come up from the floor is a speech. So please have a question ready and do a 30-second question for somebody on the stage, not do your own panel from the floor, if I can ask that. So my second question for whomever would like to jump in started really when we were in the cafe over there. What is the definition of an SME, and when do we start supporting them as a bank?
Okay. In Citi's definition, as I was mentioning, we have an SME and a middle market business. And SMEs are really anything between $0 to $50 million of turnover. So it's a pretty wide spectrum. And I think it is also important to know that SMEs in the MENA region are growing anything between 15 to 20% on an average, which is a very, very strong growth. The region grows that fast, and the SMEs grow faster. And to be able to meet the requirements of an SME when the SME becomes a middle market client is again very important. So our definition for SME is $0 to $50 million, and for middle market, which we call as MME, is 50, going right up to $500 million. So there is, in a way, a career progression for an SME when he actually requires more lending or requires stronger banking support.
The definition that the Dubai government uses for SME actually varies by the industry sector and goes from 0 to 250 depending on trading, manufacturing, etc. For the bank, Emirates NBD, for my bank, we define SME as any business between 0 and 75 million dirhams of turnover. Beyond that, we call it emerging corporate, because really then they get into more of corporate banking, wholesale banking needs. So it's a pretty broad range. And as I said before, even startups are covered by Al Tumu program, which is the concessional loan rate program for startups. So right from startup to 0 turnover up to 75 million dirhams is part of the definition.
Great. So Faysal, I'm going to ask for your alternative view on this one, as you've already shared a bit. How do you work with banks?
Well, I'll talk about that, but I think it's important for entrepreneurs in the room that SME is a definition only used in the region, broader region. I think we argued over where it's used. But if you were to use the word SME in Silicon Valley or US, people would look at you as, what are you talking about? They've never heard of the term. It's
what would they use instead?
So instead, in US, you would use terms like early stage, seed stage, early stage, mid stage, growth stage, late stage. So the enterprises in US, all the way from 0 to $100, $200 million pre-IPO, have a very different vernacular. They have a very different definition. So if you're talking to any investor from US, don't use the word SME. They won't understand what you're talking about. They may think you're in some sort of a different line of business than being an entrepreneur. So really the terms used in our business are seed stage, and as I said, Series A, Series B, Series C, which designates sort of what stage the company is at. Is it pre-revenue? Is it pre-customer? Is it first customer? Is it break-even? Is it cash flow positive? So those different series designate where you are as a company. So very different vernacular, so it's important to understand that, first of all. And second of all, I think we had a great argument this morning over coffee, bankers versus venture capitalists. It's it's like oil and water, because we take risk. We actually want to build companies for growth, take equity. These guys don't want to take any risk, and I'll just start a little fight. They just want to make money when everything is nice and easy. But what we found in Silicon Valley is we've learned how to live with each other. We've learned how to coexist. And it's taken us a while. In 2008, for example, things got really bad when a lot of companies hit trouble. Banks took all the money back that they had lended. They emptied out their bank accounts. And I even wrote an article in Wall Street chastising banks for doing that. But since then, I think the relationship has gotten a lot better. Banks and VCs have learned how to work with each other, where the banks have been a great partner in providing funding of different types, venture debt, to growth capital, to mezz capital, to different types of accounts receivable, and so on and so forth. But it's taken us a while. It's taken us 20 years to really figure out the relationship between venture capitalists and banks in Silicon Valley. And I'd love to see that dialogue starting here, so the VCs and bankers together can fund these companies with a different risk profile.
So if I take a minute, the new definition, and I'll let you guys retort to the bank versus the VC in a moment. If we're addressing startups and SMEs, or early stage ventures and SMEs, what should some of the ventures that are in the audience or founders here need to approach you for money? What would you give as advice based on all of the organizations you've looked at?
Right. First, I don't think it's venture capitalists versus banks. I think there are three angles of the triangle. The SME, the startup/SME, the bank, and the venture capitalist. I think three together make the entire ecosystem sustainable. In this region, I think it's still early days for venture capitalism. We are seeing some signs of it, and I think we'll see more and more of that. Call them angel investors, call them whatever, but we are seeing some of that coming into the region. But banks have been dealing with SMEs for years now. Of course, the crisis did have a dampening effect, but since 2010, 11, we have seen that coming back. Definitely 2011 and 12. This year, we're seeing a very healthy growth of the SME business across the industry, and banks are here to support SMEs. In terms of being ready, I think there are two things that most banks will look at. One is the business planning side of the SME, other is the financial planning side of the SME. I think on the business planning side, how robust is the business plan? Is there business continuity built into it? Is there a succession plan of the owners? All of these are very much a part of the business plan. What pricing, what margins, what contingency plans, etc. The other part is the financial planning part, which is really about how well is the balance sheet and the P&L managed. Is the owner's own money separate from the company's money? Is there regular audits? Are the audits of good quality? All of those are important to prepare the company for coming to a bank for borrowing. And once those elements are there, a bank is a commercial venture and will definitely want to participate as long as the risk-reward equation is healthy. And we are seeing that picking up in a significant way in the last 1 year. Satya?
I thought after the credit crisis, the bank bashing was kind of over, but Faysal just kind of proved me wrong. Coming to the specifics of how an SME can prepare himself or herself, I think there are two elements to it. One is the planning of the business or the venture is extremely important. And we pay a lot of attention. I mean, somebody said, I remember, somebody had put up this thing that if you have to cut a tree, spend 9 hours out of 10, sharpening the axe. So that is, I think, very important. The execution will happen, and execution will go for in a very smooth way if you've been able to plan it. I've worked with Citi for 22 years in India and in Europe for 7 years, and now in the Middle East for the last 6 years. And there is one thing which is very important, that SMEs do not completely plan the next stage. They are very good thinkers. They have got feet on the ground. They are very flexible. But if they are able to think through the next 3 years or 6 years or 10 years, I think it will become very important for the banks. And I think the other technical points Suvo kind of very clearly covered in terms of the financial analysis and the business planning. I think it all comes down to two things which the bank will look: the ability for the customer to be able to carry out the franchise and carry out the firm for a longer period, and the intent of the client as to how he or she is prepared to repay the loan. And that is the two important things that comes to my mind when I look at an SME.
So if I understand you gentlemen, it's easy to get money. You're making it sound like everyone in the audience who has a business should be able to come to you, and as long as they have a business plan and they've done their preparation, sharpened the axe well, it's pretty easy.
Well, I mean, it's definitely easy as long as those elements are in place. And the numbers prove themselves. I think we've seen, if you look at the SME lending numbers, for the last 1 year, 2 years, the numbers are going up constantly for the industry as a whole. So I think there are many more SMEs getting ready across all those parameters that we talked about. And they are getting funded, and we're seeing 40% plus of the GDP of the country being supported by SMEs. So there's definitely truth in the numbers.
Just to throw again some numbers at you, we have grown our loan book in the last 2 years by 200%. And this is when people were saying that this is just a bubble again and things are not going right and there is an Arab Spring and everything. I know we've seen benefits of the Arab Spring in UAE specifically, but we've grown it 200%, which is a very important indicator for me. Another leading indicator is that actually we have reduced certain revenue streams which were coming from lending more towards let's say, a liability business or a trade or an FX business. So it is not that the banks only want to lend. There are other products which I think the SME would like to see, and sometimes that is ignored. So the bank is not just a lender, but also a relationship partner in this whole process.
Good, thank you. Faysal,
Yeah.
I see bankers and VCs on the stage. What other things are in the continuum that early stage ventures or pre-SMEs should consider, if that word is allowed today?
I think what we're seeing a huge trend of two fundamental trends that I'll talk about that even before VCs, and the VC business is also changing, which is angel funding and crowdfunding. So two concepts that I think are very fascinating in today's world. We're seeing a lot of the companies that we used to fund or seed fund are getting funding from friends, family, or just, in US just changed the law, which is very interesting, where now it used to be only sophisticated investors could invest in startups. Now anybody can invest in a startup, $5,000, $1,000, whatever. And that is fundamentally shifting how companies, so a lot more companies are getting started. And secondly, this concept of crowdfunding. I don't know how many of you are familiar with Kickstarter or many other forms of Kickstarter, where companies are raising anywhere from $100,000 to $10 million on the web from different investors, individual investors who are interested in what the company is doing. So it's even preempting the need for VCs at the early stage, which is great, because we get to see the company when it's a bit more mature, may even have an idea or a product or customers. So I think that's one is prior to VCs. The other thing that I'm saying, I'll challenge this to the bankers, which is banks looking at different types of instruments for the SME market, which is not a typical lending, type of a business market. What are their needs in terms of Silicon Valley Bank, for example, in US just came up with a new fund which only invests in startups that are just revenue neutral to growth. So it's just growth capital, no amortization, because they want to fund these companies for 2 to 3 years till they get to an exit. And they get warrants in return, and which is, I was just talking to one of their bankers and saying most of their return is provided by the warrants, not by interest. So that's an interesting new instrument that they're using. So I'll just, food for thought as you guys think about what new products you could come up with for the SME market. But on both sides, I think on the early stage, individual investors, web, Kickstarter type thing, and then banks really acting as a growth capital player with us in partnership, where we will put in the equity and they'll put in the debt side by side.
That's great. I'm curious in the audience here, how many of you are looking to raise capital in the next year? How many of you have been successful in raising capital before? So it's about half of the room wants money and about 15 people have raised money. So I would like to open up a little bit of the floor to these gentlemen on opportunities to raise money and for you guys to pose some questions. And I know that there's only a couple people out here that have questions. Can we get a microphone over here, please? You have to pay extra to get it to work.
Can I have a loan?
By the way, while he's asking a question, what's the smallest company that you guys have lended to over the last 12 months in terms of turnover?
Would be a couple of million dirhams.
Okay. Annual turnover?
Yeah, that's really small.
With regards to SME lending and the banks, I believe the question is, what is the percentage of SME lending in the UAE on average? I believe it's around 5% overall from the entire lending portfolio. The second question is, SME lending is good, but at 10, 12% flat rates, is it really affordable to grow business? Final question is for the gentleman from the financial markets. What does it take? Why do you think we do not have really access to growth capital in the UAE? Because that's the niche that is missing. Companies that need $1 to $5 million, companies that are profitable, established, Dubai SME 100. What does it take to create an environment that we have finance available in that segment?
Thank you. So I'm going to start with the bankers on the first two parts of the question, which were...
Sorry, can you repeat your first question?
The percentage, it was advertised that
we have a lot of...
Oh,
you said 5%, so why...
That's what I've heard, something like that. Because it was advertised that we have 200% growth, but of course if you have 2% to 4%, it's not very meaningful.
Right. I think I'll answer it, or rather just make a comment on it in a way that yes, the 5% is right, but I think it depends as to when you are looking at the increase of 5%. If you were to see the last 2 years, I think that number has really grown. I would see that there are many more banks which are now playing in that field, and they're lending more. But overall, yes, the SMEs are also growing. So the total loan book or total loanable book or total wallet is also increasing. So to that extent, I think, yes, the region has got less. In other regions, especially in Central Eastern Europe, I think this number is around 10 to 15%. But one must understand that this is a new region and this is a new economy and things are evolving. And it will take time. You will not reach 10% or 15% in only a few years. And if that happens, then you're creating a bubble. And responsible finance is one of the mantras, at least what we have. And you don't want to go and give finance to a company just because you want to increase that loan book. So that 5% is right, but I think it is the trend that is what we should see. Secondly, in terms of pricing, I would just, I made a point over there, is the 10 to 12%, or sometimes even if it goes to 20%, is very, very high. I understand that. But the bank has to look at a return on the risk capital that is put in. And I think these ratios are coming by the FSA and by the regulators very strongly. Now, if the SME is able to demonstrate through strong financials, through a good trend and a good business planning, I'm 100% sure that a bank is able to reduce the interest that the bank is charging. Because at the end of the day, the bank looks at the margin. They don't look at the interest that is charged. And if the cost of capital and the cost of credit is less, then the margin for the bank will remain small. I know of cases where we have lent to SMEs at 4% also.
Okay. Can we have Faysal just comment on the early stage needs?
Yeah, so one other way to bridge the interest issue is give warrants to the bank. So I'll encourage these guys to take warrants, especially in companies that are profitable and growing. The risk is very low. They should be able to reduce the interest and take some equity in terms of upside at an exit, because that provides them, at the end of the day, they have to make their return. So that helps them bridge that. But in terms of growth capital, I think you're right. The region really lacks that growth capital, and that's one of the reasons why I'm spending time here with partners on the ground, and we're looking to launch a new venture capital fund that will invest in exactly those types of firms. And what I would love to see is 2 or 3 VCs that are active, along with 2 or 3 banks that really get SME startup scene and can be partners to provide that growth capital. So it'll take that partnership. That's how Silicon Valley was built. 27 years ago when I started in Silicon Valley, I built 3 companies there. That's how we built them. It was a partnership between VCs and banks.
So you think it's just a matter of maturity, not really of regulatory environment or anything else?
We'll come back to that piece on the regulatory. So can we give the opportunity to someone else for a question?
My question goes out to Faysal. I'm more interested to know on VCs from Silicon Valley or the US venture capitalist, how interested are you guys in the Middle Eastern entrepreneur with the Arab uprising and whatnot? So,
I flew from San Francisco last night, so I'm definitely very interested. I think the region has been absolutely ignored by Silicon Valley, and that's because of a couple of reasons. One is Silicon Valley VCs are very myopic. They're like, well, if it's not in my backyard, I don't need to go anywhere. If I can't drive to my board meeting, I'm not going to go there. That's a very common line you'll hear from general partners in big funds. Also, as a region, it's a very fragmented region in terms of cultures, markets, languages, skill sets. So it's not one contiguous region where you can say, I'll put the headquarters here, I can hire the engineers here, I can serve the customers here. So one of the things that we've had to do with the Silicon Oasis Ventures that we're launching is really think through how do you thread that needle between where is the skill set, where can you headquarter the companies, where can you finance the companies, which customers you can serve. I think we figured out that formula. It took a lot of work, and I think for most of the Silicon Valley VCs, it's not the low-hanging fruit.
Yep.
It takes a lot of work to figure this out. So why do that if you can just fund another company out of Stanford? It's just a lot easier. So that's been the biggest issue that I've seen. And also most VCs have not grown up in this region. I think I'm one of probably 2 or 3 VCs in US that actually grew up in the region, so has the ability to look at this region.
You even shared a cab with one this morning.
Yeah, that's right.
So one of the things that I'm going to pose, and I'm going to kick back to a question back there, is this discussion so far has been about money. And most of the experiences I've seen, including with the venture and the banks, is ultimately the venture angels, crowdfunding people would like to put in more than money. And their biggest value is probably in addition to that. Do you, Faysal, have a comment on more than money is what you guys put in?
Yeah, I think in my opening statement I said that as a VC, money is money. I mean, you can get it from many different sources. The key thing that we pride ourselves in is bringing the help to the entrepreneurs, which is opening up the customer channels for them, helping them recruit the best teams, because without teams, you don't have anything. Teams is, for me, the #1 part of the equation. So we all, use our Rolodex to find the best VP of engineering, the best VP
Sales.
of marketing, as well as what are the best customer channels they can go through. So that's what we really do. If we don't do that, and if we're just providing money and going to a board meeting once a month or twice a month or once every 2 months, we're not doing our job. So that's my view.
Great. Question over here. Straight, yeah.
Faysal, the question is for you. You take a lot of pride in not just providing seed capital, but also supporting the teams, talking about the business model, taking them to the revenue curve, etc. Despite that, 7 businesses out of 10 fail where you invest. So do you not learn from the failures?
That's a great question. 7 out of 10 businesses probably do fail depending upon what stage you invest in. If you're investing very early, that's a statistic that probably is true. If you're investing midterm, you probably have higher success. If you're investing later, you have a lot higher success. So it just depends upon where you are in the curve. That's why when we invest in one of those companies, we need to, if I don't see a 10x return, I won't even touch the company. So at a minimum, it needs to provide a 10x return. It'll probably fail, likely, but if it succeeds, it should provide a 10x return to make up for all the other failures. In terms of lessons learned, that probably is where most VCs, it's a very interesting formula. Hidden truth in Silicon Valley is it takes about $20 million to train a VC. VCs are like fighter jet pilots. It takes 20 million to train one because you are going to have those losses. And it's not something you grow up with. And I can tell you, as an entrepreneur, I built 3 companies, from 100 million to multi-billion-dollar companies. And my first failure came as a VC. Because I came in and I thought, no problem, I can build companies and I can help other build companies. But my first failure was as a VC. So it is because you don't control the situation. You are merely an instrument to help the CEO. but you learn. But it takes a long time to learn, and you spend a lot of money learning. But hopefully, we've learned.
Okay. I see a couple questions in the back here.
Hello. It's a question directed to all of you, almost. We are all talking about money, basically, but are there any facilities for like social corporate responsibility or projects within the scope of EEER, renewable energy, or something of the sort that would save maybe our environment or something like that? Because, I mean, I come from Lebanon, and we have some kind of, from the government, energy loans that are 0% interest, stuff like that. Do you have that in the UAE, or are you seeing that abroad? That's just my question.
Suvo or?
Well, it's at this point, the program we have called Altamu doesn't specifically focus on any sector, but we focus on the nationality. So we want UAE national-owned businesses to come to us with a business plan, and we would fund it free of interest for the first 3 years and free of repayment for the first 2 years, and we would see it to success and to growth. That's part of our CSR initiative, giving back to society. We've seen decent pickup. We want to promote it further in the future. But you're right. I mean, at this point of time, there are no specific loans to energy or environment, etc. But I'm sure going forward, with the support we're seeing of the governments of both Dubai, Abu Dhabi, as well as the other governments here, I'm sure we'll see more support coming in specific sectors.
No, Citi does not have any zero interest loan or any program like that, unfortunately. But what we do have is what is called the Citi Foundation, out of which we go out and fund or put some money across to certain elements in the society, which could be, it is, for example, we are part of the Dubai University. And I have played some sort of a role in looking at the entrepreneurship program for women in the UAE. And we look at all the projects that they write, and we review them, and we actually give an award for that. So there are some elements which may not be directly related to funding or financing, but that is the little bit that we are doing for the society.
Final question, then we'll do some wrap-up.
Just to pick up on the previous point, you mentioned that there was the funding for companies that are UAE national-owned. By definition, in the UAE, is not all LLC companies UAE national-owned, because there's a 51% shareholding
Good question.
ownership right. So does that mean any company that is 51% UAE national-owned in the UAE LLC could approach you for that loan?
Good question.
Just to clarify, these are startup companies only.
Correct.
Owned by UAE nationals entirely. So it's essentially run and managed by UAE national, not just on paper, but actually. So these are young UAE nationals coming in with a bright business idea and want financing, we'll finance them.
I apologize, ladies and gentlemen. We are going to have to wrap this up because they're already starting to move people across the way. I've got people pinwheeling with arms in the front here. And I would like to thank the three gentlemen on the panel today for sharing their global experience in financing. Thank you.